Hey, greetings. Happy Thursday, and welcome so much to joining in on this Thursday. It's kind of macro to micro power hour with a twist. This is Women in Trading and Finance edition, and I'm very excited. Anand of Sanglucci could not join us today, so pinch hitting is Jonathan Gibbons, VigTech.io. So thank you so much, Jonathan. I mentioned in DM that I needed a young punk with familiarity with the quant space, because we have a really talented young woman who's going to be on that I want to pick her brains and basically get her sense also of kind of the environment of being a woman in this trading space. But also she has developed some really cool tools, since you talked with her and met with her at least virtually. And basically, she's got some pretty hot stuff in the option flow world and some research, not just her meme, research, which was kind of fun around GameStop and silver, but also her algos that are kind of catching indicators that are catching her, driving her fame as well. So let's find her real quick and make sure she is here. And tell us a little bit, Jonathan, while I'm trying to locate her. How do you know Lily?
It's a total happenstance. So you actually, this is so funny because you and I met through Twitter back March, something like that last year. And then we created Vol as well on my side because of some stuff you had told me, like, hey, these are good thoughts, share them, right? And create a site. So we just created a blog. And this is even before Substack started like getting going and like people were really catching on fire with Substack. So we just made a site and started putting up a blog. Evidently, there were people that were reading the blog, and they liked the blog, and she happened to be one of them, and somebody else actually introduced us because she was working on a project, and they were like, hey, and I actually had never experienced like the Discord environment like firsthand, and it was her Discord with Final October, and I'll let her talk about all that, but like this whole corporation collaborative thing that they've got going on, and it was a really great thing. They built an entire world for traders, and they actually invited me to come in there and like post a few things, and that's how we met. And she was working on the project, and I told her that
I still can't hear anything. Can you guys hear me?
Yeah, we can hear you.
We can. Yep.
Literally, I do not hear anything.
Okay. I see you.
Yeah, we can see you.
And we can hear you. We're talking. They can hear us. Maybe a mic issue? Speaker issue?
Yep.
We'll work it out. First, and so go ahead. Sorry, Jonathan was explaining how he met you, Lily. She's gonna come back in.
Yeah, she'll come back in. But so ended up being where like she introduced like her what she was working on, and I was like, oh, that's great. How can I help that out? And so we helped her get some baseline data to start testing and all that, and like she's we just kind of talk and collaborate since then. But they got these kids, these group of kids, and I call them kids, but they're young adults. They're doing great stuff. So I take no thunder from what she's doing. She's doing some great stuff. So that's how we met. We actually met through just the created Vol as well, and people shared it, liked it, and that goes back to you. So I guess we met because you told me I had to create something that then other people liked, and here we are.
And she's trying to come in with the speaker. Let's see if she can come back in and say howdy. So okay. How is this working out? I mean, is there anything that she's built on VigTech with you?
Not specifically on the app like that, right? Like we've supported some of the data infrastructure that they needed to create some stuff. Can you hear us? Can you hear us or?
Okay, now I hear you guys.
Yay! Okay,
cool.
Okay, yeah. Welcome. Okay, we're gonna start over. All right. So first of all, thank you so much for attending. This is Women in Trading and Finance on Thursday, and we're also mixing it up with obviously kind of a market look. And in particular, Lily spied her early on Twitter, on FinTwit, with kind of a perspective on the quant side, also actively trading. And recently, it's been kind of fun on the GameStop and the silver optionality world, if you will. And Jonathan has, by the way, referred you several times as an ascending star. And so for me, just to kind of backtrack a little bit, so obviously I am founder of LaDucTrading.com, and I run trader education. I'm an active trader. I support clients that do the same, and I really love this business. So networking is important to me. Peer networking, I can bring more value to clients, but also women in this space, elevating, inspiring, attracting women into the space, building up their confidence. And I have a strong belief that women can be what they can see. So they need to see more women in trading and finance, plain and simple. Just that's to the point. So you're a young woman in the quant space, and recently, and you always have really salient comments, and you obviously have some really interesting quant work that I want to learn more about, because there are people who follow you on FinTwit, and this is really the point, right? So we're kind of like this community, and we're trying to figure out personally, but also professionally, where each person kind of spies a perspective. And recently, Jonathan and I talk every Tuesday, and we talked about the short squeeze, the gamma squeeze plays of GameStop and silver. And we've commented a little bit on Twitter, and obviously they have been very hot tradable themes.
Mhm.
But you did some research, you dug in and really got into some data, and it was hot. It was well received. You got a little special there on a Friday afternoon for Real Vision. So share with us. And so anyway, Jonathan knows you for a while, and he is actually the one who referred me to you many months ago. So I've been watching and learning, and loved your articles, which, by the way, I saw one referenced in a Bloomberg opinion piece. Told Jonathan who told you. So we're kind of keeping it, encourage this exploration and this community and this knowledge share. So now you do your intro. How did you get into this space? Are you in university right now as you're doing this webinar? And what is this work that has got everyone very excited?
So thank you for the introduction. And, I've talked to Jonathan for months. He's super awesome. Love Big Tech, love what they're doing as well. Actually, a funny story is Jonathan and I have talked about, this work on the model I've done since October. So, he was really early on, this options train. He actually was the first one to kind of understand what I was measuring, actually, before I did. Because I was like, wait, this is doing this weird thing. What is this? What is even going on here? He actually gave us, a lot of the data that we used for the back testing and for the intraday analysis. So fantastic person, fantastic company. Love what you guys are doing.
I have to echo that, because I'm hosting my indicators on their platform, their data, right? But also, you're awesome, Jonathan. We're your fan club. Seriously, you're easy to work with. You have positivity. You are more than curious, and you drive this information exchange. And it's not just your platform is this marketplace, right? But you act like that in your persona. You really are. You're a great guy to work with. So thank you also on last minute
Exactly.
for Anand of Sanguti, who couldn't be here today. So I wanted to get this because you're more technical on the quant side, right? And I just try and connect lots of data points, but I want to get that perspective. So continue.
Here, let me say this. I thank you both, right? I really appreciate the statements and the feedback. One of the reasons that I feel that way and exhibit that behavior is because I'm not from the space, but I'm extremely curious about the way the capital markets work and the way that this all flows and how the world works, right? At the end of the day. And I think that's the similarity that the three of us have, is a humility that we don't know everything, and an empathy with others that they might not know everything. And I've had different conversations with you both about that. And then also we foster the discovery. We're also bold, right? Like you guys are very bold people, right? And I have admiration for both of what you do. I've told you both that separately, that you should be proud of what you're doing. So like one of the things that I would say is, in a question for you kind of right now, Lily, it's like, what really, I think, you know, because I know some of this, because we've talked kind of, you know, offhand, is what got you to really look at this the way you were. You were extremely curious and you're starting to dig into it, and you have a different perspective. It's like Skunkworks, like was the way that they built a lot of the things for the aerospace and solved a lot of problems with creating new things. NASA. It's like these different ways that people bring new trains of thought to existing problems, or maybe even see things that nobody else is even seeing. It's because they're not stuck in the world that is what it is, right? And so, no, you can't think of anything except this. This is the way it works, right? And as the world is becoming more interconnected and more dynamic, we get these different things that are happening. We need new people to look at it a different way. And then we're all opening up new things. So what was it that, and I've heard some different things, like, you know, I've seen a couple different interviews, but what was it that made you really like, look at this and be like, you know, I mean, I'm going to dig into this a little bit. I'm going to just like put my math brain into this and like really think it through. Like, what was the trigger for you that made you start thinking that? Because you're, you know, your ability to synthesize, and then your ability to communicate corresponding ideas and then create analogs on that, right? That's very, I've told you that that's a great deal of talent. But so what triggered it? What made you want to do it? Right? Why were you starting to dig into it? Because you've done a lot of stuff in a short period of time.
Sorry, my mic was muted because of course this is Zoom and I just didn't want to echo. So my background, for people who aren't familiar with what I do or what I talk about, is I used to be a software engineer. I used to work in big tech. Now I'm currently a PhD student at UC San Diego. So I'm coming to you live from graduate housing. It's not, I wouldn't say it's like a dorm room, but it's not that much different than a dorm room. What really got me started was I decided to go to grad school, and that was a humongous pay cut. You know, you're going from being a software engineer to a PhD student. I'm not going to tell you how many zeros you cut off your paycheck from that. So I really picked up, I mean, I've been in the markets for years. I mean, my first job, got stock, still have that stock. It was Microsoft. But I didn't really look at the markets as something I needed to really play around with until fairly recently. I started trading in earnest around late April of 2020 when everybody was getting into the markets. And of course,
I love that. There's something very satisfying. Like you literally have skyrocketed since you focused where you focused your energy. This is fascinating.
I mean, it's been really hilarious because people have asked me for like takes on stuff like crypto or like, you know, just random areas of finance. I'm like, dude, like maybe you should be the one telling me this. Like, but I got into option trading in particular because, you know, Robinhood, of course, was the options platform until like a couple of days ago when they started to destroy their brand.
Yeah.
In particular, and this is actually how I got, you know, involved in Twitter and everything else, I joined this service called Unusual Whales, which, you know, is run by a friend of mine. It's an option sweeper tool. And one of the big things in day trader communities, especially for like newer, more dopamine addicted day traders, is earnings. And earnings is addictive because it goes either really up or really down.
Binary.
Exactly.
Yeah.
Humans love binary options because it's really simple.
Yeah, speculative, totally.
Exactly. And I mean, you can make a lot of money if you pick earnings right. I mean, I'm sure a lot of you saw what happened with Zoom when it went from like what $300 to like $420 in like a day.
So you like this adrenaline, you like this, but at the same time,
okay,
wait a minute.
Yeah, what's hilarious is I am a risk averse person. Like I do not like this
Earnings
stuff.
is risk, pure on.
It's hilarious because no, that's why I wanted to like automate it. I was like, well, maybe I could figure out if there's a signal for predicting earnings here.
Okay.
So I actually, I mean, there's a lot of different stories of like how I came up with, the formula that I used, the note model and options pricing. I'm going to stick to the more official, like, Disney version of it, which was basically, it was, okay, I know about this concept delta hedging, where option contracts need to be hedged by a market maker. Is there any alpha here? Does it tell you anything about the price distribution in the future? So my original model really was, does this tell you for earnings based on option flows before earnings, what direction it should go? And we kind of got stuck for like a month or two using a really crappy broker for this data that it seemed to work in back tests. It seemed to work kind of in forward tests, but we always had this inkling that something was wrong. And my original version of this theory was like, this would only work for binary catalysts. So this was around August. I started originally I was doing this by hand. I was literally going into Thinkorswim, looking at what it said about the option breakdown and calculating the delta spread. And it was not accurate at all. I mean, it was like they give you like what, 0 to 20 delta and you just find the midpoint.
Yeah,
But it doesn't tell you the actual. So what really changed this was someone had the fantastic idea to put it on the S&P. And I was like, no, I don't think it's going to work. It doesn't, like, why would it work? There's no binary catalyst here. And then September 2nd happened and the market just kept going up. And this number that we literally had a flat web page. It was literally an HTML page that was just a form element. Like, it didn't have any decoration. It didn't have what we have now. It just gave you a number. And we saw this number keep going up for days. Like, it looked, we had seen it earlier that this happened with Apple when they announced their dividend. And I was like, holy shit, what if the same thing is happening to the market? So on that day, like, I literally spent most of September 2nd warning people in unusual whales with my friend. I was like, this looks bad, get out of the market. And then September 3rd happened. And the market, and I was like, whoa, what the actual fuck just happened?
Yeah.
And I think around this time, so we started delving into historical data. And we also noticed that this weird indicator we were looking at wasn't just a number, but when we graphed it, it literally had the same shape as the S&P, like the price. And I was like, what the fuck? Like, why? Because I thought it would look maybe similar, but it looked identical. And,
Have you figured out why?
So this is something that actually Jonathan contributed to pretty early on, because when I talked to him, under his moniker Vol as well, he was like, this has to do with liquidity. And I mean, everything in the market has to do with liquidity. I've learned a ton in the last couple of months about market microstructure. But what we're thinking is, and this is what, I'm going to delve in more on my actual blog posts and video on reversions this weekend, is that this number actually is measuring the weight of newly written contracts by market makers on the S&P intraday. So when you buy an option that didn't previously exist, for instance, so if someone who's not a market maker sold it to you, that one already exists. But when you buy a new one, that contract needs to be hedged pretty quickly. It doesn't need to be hedged necessarily instantly, but it has to happen within a fairly logical amount of time, minutes, seconds. Otherwise, the market maker is taking undue risk. And our hypothesis here, and we've looked at this intraday data again, thanks 100% to VigTech and Jonathan in particular, is that when this metric gets above a certain magnitude, there really isn't any like fixed point where it happens. It's kind of like a rubber band. When you stretch it, the more that it goes up, the more likely it should go down until you break it.
Do you have this graphed as like an oscillator, so you can kind of create the overbought, oversold, and then when it crosses down or crosses up? I mean, have you been able to kind of.
Yeah, walk her through the history. Like when you were talking, you created it and you look at it historically, and you're like, when it gets to this ratio of deviation, right? Like you're not reading, right? And then it's gonna revert back. So it's an intraday, and then talk about when you looked at it historically, like what you measured when you back tested it, right? So if you're looking at it on the buy side and the sell side, especially, and then talk about it in, if you can remember all this, and then what, 2017 on versus before, right? When you saw Robinhood start with the options, like it's really interesting comparison when you think of that. So the oscillate, the note reading, what does it mean? Just in layman's terms, the way you come up with it, and then when did it really start to show itself more once you look back in history?
Yeah, so I mean, once we kind of saw the market in September and then actually in October, it warned me again. We actually we had a discussion on October 12th, basically, because it was recording some insanely high reading of like 180. And I was like, oh my God, this looks really bad. What is happening? And of course, October 12th was the peak in October. What NOPE effectively measures, at least this is our current theory, so maybe ask me in a couple months if this is the same thing. It measures the effect of options on the price determination of a stock. So historically, the thinking when options weren't a major deal in the market was that the option market does not impact the spot price of the underlying asset. But what we found with NOPE, for instance, and this has been corroborated since 2007. I mean, there's papers on gamma reversals, there's papers on, how it impacts the overall returns. I don't think anybody has ever done it to this level of granularity as what we're doing. I know Squeeze Metrics, of course, has done a lot of research, and he has, the GEX and DIX indicators. But basically, our understanding is that, this metric measures the weight of the options market on the stock. So what matters here, though, is that options have what's called implied leverage. So options represent shares in a way. I mean, it's represented through its delta. It's called the hedging ratio for a reason. But unlike normal buying and selling, where you have like a human element here, these are algorithmically traded shares. They have to be, exactly. So they have to be sold or bought at certain intervals, or you assume risk that the party who operates these contracts, the market maker, will not tolerate, because their job is to just basically sell on ask, buy on bid. That's how they make their money, at least ideally.
Yeah.
So is NOPE right now targeted on the optionality of the S&P, or have you done it for other indices, or actually underlying stocks with lots of options, the FANG and such?
So we've looked at it a little bit on underlying stocks. I mean, I do this as a side project really for my current work as a PhD student, and we have like a fairly irregular team. It's also been difficult historically to get the data we needed because unlike other fields, finances, I wouldn't even say the problems are necessarily more complicated. It's more that all this data is siloed in these exchanges that just want to screw you for money. So, I mean, literally, we looked for months, at this chart and saw that intraday there were reversals happening. This wasn't a new concept, but we didn't have data to backtest it, because getting historical options data, I think we were quoted just for S&P. If we bought it, we were quoted $1,800.
It's a lot more, as Jonathan knows.
Yeah. So like, you got the data. We took care of get you the data for the SP. So then you look at it and you looked at that historically, and you saw the intraday, right? Where, one of the fascinating things that you and I talked about was that when it would move to, let's say 3%, right? Something like that, it's going to come back intraday. And I refer to these things, and we talk about it because, Samantha, you and I talked about how I see it in patterns, right? And then, there's some sort of mathematical explanation for it. Well, I would always see intraday trading ranges, right? So too far, too fast, real simple statement, too far, too fast, it's going to come back to an extent, right? Well, she's captured it mathematically in an extent that the options delta, right, intraday can create triggers. Now, nothing is precise, but when you look back at the S&P over this history, you could see the performance of the, buy it and sell it, right? Like what that would mean on those deviations, just on the deviations alone,
So
on
are you
these
saying
delta deviations.
And you're saying it picked up in earnest when the retail crowd came in through the Robinhood app in particular, not just April, but 2017. I mean, you're seeing a big inflection change.
I mean, it wasn't exactly 2017. It's more just
Like
I graphed
18,
for
18-ish.
I have a graph that I have on Twitter and I can share it actually with you guys after this. I mean, effectively, if you plot this value since 2007 at the end of the day, so just looking at what it is at 3:45 p.m., because that's when our broker, gave us this data, you can see that it forms like a cone shape. So it goes from really small and just explodes outward like a fan. And what that means is this value is heavily heteroscedastic. So not only so it's stationary. So it always has a mean or a median around 0, which is one of the reasons why the intraday reversions probably work, because it has a tendency to come back to 0 if it gets too far from it. But basically, what this means about the heteroscedasticity and the fan shape is that over time it's been getting worse. So this effect, the weight of the options market on the S&P has been getting more dominant. And the problem with that is, like I mentioned, and like Jonathan alluded to, options are leverage, and leverage doesn't basically, in this case, the leverage doesn't act the same way as a natural buy or sell. So if you have, let's say, the price driven only by call options, then if it stops moving, those call options are going to start bleeding delta. And when they start bleeding delta, and I'm assuming again that all the call options are sold by market makers to, market participants. If these options start bleeding delta, then the market maker starts selling shares.
Yes.
And those shares basically cause other calls to sell off more delta. And it becomes this vicious cycle. So basically, the simplest explanation for this metric that I talk about, the NOPE, is it measures the market sensitivity to perturbation.
Market sensitivity to what?
Perturbation.
So basically, reversion, right? So, and when we were talking about this, I was like stabbing around at my concept of this doom loop, right? Because there's a bunch of different impacts and features of that doom loop that started to manifest in 18, right? And it gets a little bit worse each time. And that's kind of where, I approached her, and Samantha was asking her Lily questions like, hey, could it be this? Could it be that? In the context of what's causing that cycle to become more and more vicious, right? Like it's very clear when you look at the history, and then when you look at 18, it's significantly different structure of that chart after these options have become what we would call the feature. What we were talking about on Tuesday, Samantha, is a feature, wasn't a bug in Robinhood, where you could go buy 100 contracts, right, for nothing, right? And you could definitely tell that has grown, and it's in a bunch of different things. It's not just the single stock stuff. That's a more recent thing that's occurred, let's say in the last 12 months. So like this has been growing over the last 3 years, really, based on what you've seen.
I mean, yeah, it really picked up after 2013, I'd say. It got worse after about 2016, 2017. So pretty similar to when Robinhood came out. But this is why it, at least supposedly predicts corrections. If you followed my Twitter, for instance, I warned on January 8th that we were entering this period, because I saw these two clustered end of day readings that historically led to lower 14-day and 30-day returns. And the following week, we dropped 2%. And then we went back up, and everybody was like, okay, on inauguration, I got so much flack because I was like, okay, this looks bad. My indicator is saying go short. And we rallied 1.5, 1.7%. It hit like 115 on Wednesday, I think, of inauguration. And I kept quiet because, I didn't want to be the girl who cries crash here. We did the same thing on Friday of that week. We got like 65. And what that means, historically was we were in a very sensitive period of perturbation. My hunch for this is that the reason that end of day value seem to matter is because when it's so far away from zero, then that means that the dealers could not go flat by end of day. There wasn't enough liquidity available in the system to actually hedge the contracts effectively. So basically, that's why it just did not go down. And next week happened and we dropped 4%.
Right.
And, it doesn't tell me exactly like when this will happen. It's nice when it happens the day after, like it did in September. It gives me an idea of, we're in this period of weakness. So definitely pay attention. If I could give to everybody here something, even if you don't trade options, you should pay attention to what's going on in the options market, because as many smart people have said, like right now, the market is the options market. It is not the situation where SPY is leading options. Options are determining how SPY is moving.
Well, and I'm curious, have you done any comparisons? Chris Cole, has long vetted that options are not the tail on the dog. Not the tail on the dog. They are the dog. So this is something that has, kind of been pushed about for a little while. But I'm kind of curious. I'm looking for that squeeze quote that you and I were actually looking at this weekend. I'm trying to find it in my Twitter because I know that I sent it out, but I can't. Basically, there's a lot of implied but no supply. Do you remember that one, Jonathan?
Yeah. So
I can't find it exactly, but
the conversation you were having with Squeeze on that thread maybe 2 days ago, right? Where there was a little back and forth. Do you remember that? I think it was in the evening time, East Coast. I don't remember, but if somebody sent it to me and then I was checking it out, but you guys were going back and forth about a specific topic as it relates to what his thoughts were, where it goes from here, what you were chiming in too, and it kind of goes in the conversation of okay, how does this all shake out, right? Mm-hmm. Like in the medium to long term. Short term, notes picking up stuff. Intraday, right? Could be intraday deviations. I saw one the other day, and you were talking like 3 different ones in the same day when we were getting pretty volatile. And I told you I would be very curious once we got a little volatility, like how this thing would function, right? Real volatility. And you sure enough, you got it like last 2 weeks, and you were seeing stuff 2 times, 3 times in the same day, right? And that's totally, to me, proves spot on in the thesis, because it's measuring as that when volatility gets wider, the trading ranges get wider, forcing those indiscriminate functionalities to function on a dime, right, all day.
I mean, effectively, like our thought is that, NOPE tends to oscillate just like, SPY range does as well too. So, right now, for instance, the metric we use for reversions is 30 for entrance. If you look plus 30, it probably widens in response to increased volatility, because if you think about NOPE as modeling, as Harold Jacobson said, the implied order book, what it's actually measuring is what zones of liquidity there are on, basically SPY's price chart. So you would imagine that there's more, liquidity and hence, more market depth, especially on the negative side, because people, when SPY goes down, people are going to try to panic sell. So they're going to have a lot of resting limit orders, much lower than the current price. You don't see that as much on, going up, because, people don't tend to crash upwards. But basically, especially on, there is a deeper relationship on this tendency to reverse with volatility. And it's also why it tends to map with like key order flow levels.
I saw you and Strizzy talking about that, like, and I told it, and I'm a big order flow person, right? That's how I actually learned markets. And I think that there's a direct correlation to levels, right? And that's what the conversation was the other day. So I'm totally on board with that. Like so Sam, it's like those VPOCs, volume point of control levels, different levels are where big order blocks sit, right? And so those order levels are key to where this thing's going to land and trigger maybe its next movements, right? Both down and up, and it jives with the NOPE. Basically, the NOPE readings have been showing to line up
to line up with
with these levels, right? And
which levels? Yours?
with the I wouldn't say they're mine, right?
No,
Like
the
we
VPOC.
chart,
I mean, the value
yeah,
point of control.
VPOC. You can see, so we created fair value gap, like so in an auction, right? If it skips a level, right, that means that there was more buyers, right, than there were sellers, right, or vice versa, right? And that whole area, and it just skips, right? So in a lot of the times that's happening overnight for the most part. Sometimes it's going to happen very much intraday, like very, very rarely, right? Where you're going to see a huge gap, right? And it may be some sort of news, or usually that's going to mean revert pretty quickly back to that auction level because it wasn't necessarily determined. Price wasn't determined at that place.
Okay, so then what's the time frame for your, like, in other words, your data triggers? Like what frequency are you checking this algo? Like, is it?
I mean, right now, so it's not an algorithm like that you can trade on. It's really just like a classical indicator. But
okay.
For instance, on back tests, you know, we've seen it happen multiple times a day. For instance, we know at least in 2020 data, which again I got from Jonathan, we know that it has positive expected value. You know, if you, especially on the shorting side, so if you short it when it's above zero, you're basically, no matter what threshold you choose, you'll make some money overall. But yeah, I mean, that definitely isn't, you know, the game plan to like try to automate it. I also think, you know, of course, we want to look at ways to dynamically define our thresholds because static thresholds don't really make sense. And there's some months they're going to perform worse, some months they're going to perform better. There is probably a relationship to the background level of volatility we can use, as well as if it's auto-correlated with itself, which I think it is. You know, we know, for instance, end of day, there's an auto-correlation period for NOPE of about 5 days. Intraday, my thoughts are it's probably correlation between the daily maximum and minimum values. So I'm going to go more in depth on like the quantitative aspect.
That's the big nut to crack. I mean, for those who even long short portfolios, the big thing is timing those drawdowns or avoiding those drawdowns. Period. End of point. Volatility reprices everything. So you know that's why I specialize in it. I mean, that's just you know. And if you can find whether it's visually right now in a classical indicator that, you know, develops patterns, and then you create, you know, familiarity with the changes and the inflection and the rate of change, that's golden for trying to identify the turns. I was just curious if this was an intraday or if it's really you have to do it at the end of the day kind of data cycle.
Well, it's interesting because end of day, and Sarah, I'll let you talk, Jonathan, after this.
No, it's okay. Go ahead.
End of day, it's interesting. I'm always reluctant to really trust it by itself. You know, I do always tell people, you know, do not rely on necessarily NOPE by itself. It's honestly just a single factor model. So you're going to get a single factor. End of day is interesting because there's overnight trading on, you know, basically ES, which I'm sure has relevance to predicting the next day open. So, I mean, ideally in the future, you know, as we pursue this research, we're going to have more data to like do some kind of combination between ES and SPX and, you know, SPY options. So we can actually get like this holistic picture.
Now, speaking of holistic picture, I found the quote. Remember, I was like, I remember this. It was important, but we covered an awful lot this weekend. There was drama. There was like this whole past few weeks with the whole Robinhood and the short squeeze and the gamma squeeze and the blah blah blah. Okay, so Squeeze Metrics said it best. I wrote, leveraged short convexity goes out with a bang, such as in what happened with March. Leveraged long convexity goes out with a whimper. So this data, this bleed that you were referring to earlier, are you able, in other words, you can kind of see where it's losing, it has a diminishing return, that your factor just goes so high and you're like, this is done. I can see that it's bleeding calls. They're just not having the same oomph anymore.
So this is where I guess I slightly differ with Squeeze's, you know, statement. And I mean, I do not doubt he's well more experienced and has way better data to see things than I do. My assumption here is that as this metric increases, you know, in severity, as we've been seeing over the years, we should see, this is what I call the options degenerate marketplace.
Okay.
It's this basically, it's the state of the market where everybody is so sensitive to perturbation because of this implied leverage that's afforded by options and the delta hedging, that instead of seeing necessarily one big drawdown, we're going to see a lot of medium-sized drawdowns as basically options become more dominant. And one of the interesting things about this is, assuming that the market is in this degenerate state, then we're not really able to stay in place very long because of this delta bleed, which, Squeeze mentions.
Yeah.
So in fact, the market has to, in an options driven environment, it has to really be going up and down unless you get to the state where you're basically balancing these two forces of delta inflow and outflow properly. I think this volatility will be a problem and probably be a factor in the next crash. I do have some
How
data.
so? Like, define what you would expect based on your studies so far.
So a couple people on Twitter have kind of alluded to this, and my own data pretty much backs this up, that the coronavirus crash may have been in part caused by this options effect, the sensitivity that I mentioned. It did record a warning reading on February 12th. And, this looking backwards, it didn't exist on February 12th, 2020. So could not have gone back in time and saved you. In fact, if you look at my own back tests on this, my model performs a lot better than the S&P during the crash, like a lot better. It actually, between 2017 and 2020, the linear regression model, and this was like the dead simplest model, literally, I think it made up like over half of its gains during the coronavirus crash because it just knew to go to short. So it's gonna be interesting, to see. I think that the severity of crashes, and the magnitude of these corrections, and also the frequency of these corrections will increase as options increase.
It's 100%, and I've stated this a couple times, Sam, on our conversations, and Lily and I've talked about this. In this context, it becomes basically an environment where volatility grows. There is no resting place. Hence, the active management has to come into play, because you're not able to set it and forget it like you did in the 2010s, because it's just a different market. It's a different structure of market, not necessarily like you're buying different things. It's just that the options are simply overwhelming the static state. It can't function in a static state. And this is like good examples like GameStop, right? Like GameStop can't function with that many options functioning in and around it in a static state, whether that be down or whether that be up. It's getting drug around, right? Like either way. And I think that that's much more prevalent going forward. I just totally agree with you on that. Like I don't want to stick you to a top call or bottom call here. We've only talked about it in the context of liquidity. Can you kind of catch those moments where it's expanded such in a way that it's going to contract, right? Indiscriminately. And I think that's the beauty of the model, is that it's catching those, right?
No, it's I mean, one of the things I like, and a lot of people have told me every time it misses a day, for instance, it's like, oh, well, maybe it's, you need to include this or that. I'm like, no, it's a single factor. Like it should be used as a feature in your actual trading decisions and algorithms, and not, let's say, the sole source of truth.
Right.
But it's the GameStop analogy is very correct. I think that the market itself is being drug up by these options. You can effectively cold squeeze, S&P into infinity. Eventually the bill will become due. It's been more difficult in this environment of, really there is no alternative. Where else are you going to put your money but the market? And it's really interesting to see this.
I think the question is, where is it going to hedge, though, too? Where to put money for the hedge? Because volatility seems a little broken.
I mean, volatility is it's interesting, and I mean, a lot of traders specialize in these volatile marketplaces.
It's good bang for the buck. I mean, honestly, when it moves, it moves.
Exactly, and it's also going to be interesting because my hunch is that with the GameStop affair, out of the money calls and puts are going to be more expensive going forward, especially on single stock names with low
100%.
liquidity.
100%.
So it's going to be even more difficult to actually hedge your portfolio and use
It's
options
not
for
just the
kind of
expense,
stuff.
but it's also riskier to be a short vol trader only, right? I mean, they got blown up in the February, March. Right now, it's expensive. VVIX is still over 100. And then it pops up like a daisy, like last week, 64%, no, 62, whatever. Third largest, VIX surge in history. They're like, wait a minute, what's going on? That's what I mean by it's a little broken. It's very expensive, the calls, but it's also difficult to be a short vol trader purely because of the gyrations. It feels more like, I don't know if it's the slow bleed, if you will, but it feels like it's broken and they need some other avenues, and bonds aren't doing it.
Mm-hmm.
So
Yeah, I mean, I don't have a good answer here about what the most effective hedge is.
oh, we
some
do.
people.
We have one. Jonathan and I, we always go dollar.
Yeah, you kind of see. We were talking about the dollar last night. Is it a cause or is it an effect? Really interesting. Like we had just talked about this yesterday. Is the dollar causing this, or is the dollar being affected by this? Right. And I'm in the affected camp. I'm not in the macro camp. I'm in the And somebody asked me this earlier. It's the TINA applied to different areas, right? So like if I don't have anywhere else to go, I'm going to the dollar because of the liquidity nature of the dollar and the fact that it is the primary functional tier 1 class asset, right? And bonds are, like you said Tuesday, Samantha, bonds are a disaster. And so you don't really have different alternatives. And this is kind of where you look at it versus looking at it macro. Like you're looking at it specifically, each one of these things really, we've discussed this like independently, right? You're looking at them for their own standalone nature instead of tying them together. And I have to side with that. I agree with the effect. The dollar is an effect situation, not a cause. I don't think the dollar is causing this action. I think the options market's causing everything in the equities market. And then the dollar is like one of the last safe places to be to hedge anything at this point. And I think, I don't know, man, women, I don't know, like, what you really can do. You can long volatility here. You can trend track this kind of stuff intraday like you're doing. It's just going to get very, with what you're describing, with the options market wagging the dog and the options market creating oscillating volatility situations based on the order book situation that we know is a fact at this point. We've looked at the data. It is what it is. You want to deny it, you can deny it all you want to, continue to believe that MPT and things like that matter. They just don't. At this point, they don't. What do you think people, if I'm sitting here and I'm long, I'm curious to you both. This is a question to you both that I don't have an answer to. What do you, if you're holding stuff, how important does it become to know these kind of inflection points, and then how and what do you offset your risk with? It's a great question, right?
I'll go first, but it's really simple. I'm more active management. So for me, it's eyes on the prize all the time. Second, it's cash as the hedge. Third, I'm really good at timing volatility. So for me, that's comfortable. But most people, it's not. They're afraid of volatility. They move away from volatility. I go toward it. So, I mean, I'm going to be a different kind of, I like these outliers that revert. So for example, the NOPE, indicator, I would go, okay, that's another tool in the toolbox for knowing when the system's more fragile. And that's what I want to know, is when to throttle back, when to, step aside, avoid the drawdowns, help clients then hedge, whether it's just play that particular, short duration or really get worried about it, right? And that's the whole purpose of the portfolio hedger algo. It's like, okay, wait a minute, we're in for it. This isn't just for a trade. This is for portfolio hedging. So I'm curious. Yeah, I'm curious where the obviously your inspiration came to create NOPE, and now where to from here. And yeah, this is exciting. I mean, you've got a strategy. It might not be an automated trading strategy or into an algo in the form of a trigger, but you have done some really great research that is And some of it was the meme stuff. That was great. The David is at Goliath. Really, who is GameStop Reddit? And we haven't even talked about that, but where do you go now that you have gotten this notoriety and such solid feedback on your indicator? What do you want to do with that?
I have no idea.
That's honest. It's a journey.
I did not expect, like, when I started working on this, it was more of just like a research question for me. I was really dumb and I was like, well, maybe I can predict corrections. And of course, like, that's really the only kind of unknowing arrogance that a complete novice could really say that they could do. Because of course everybody would predict corrections if it was so easy.
No, but this is beautiful, because this is how many people got into the market last year and did phenomenal returns. Heck, it's how they even got into GameStop and stayed there. And then they figure out if they really like it, if they really have the stomach for the risk, then they go in and they figure out why things move.
Exactly.
You're actually coming in and figuring out why things move first.
I mean,
like I started out as a total cowgirl. Like I had no idea. I was like huge up at 6 months and I'm like, woohoo. And then I figured out really how it worked, and it wasn't so easy after that.
I approximately, yeah.
Account for it. You gotta blow up at least one account. Yeah.
I've never blown up an account. I've never
You're young still, sweetie.
I don't know. I give her the benefit of the doubt. Maybe the next gen they'll skip by us. We didn't want to take the hard road.
I'm actually like very risk averse, so I always size my positions probably too small. But what I was gonna say is that, yeah, I mean, I'm just happy it works, to be honest. I was happy to see it, played out in January like it did. Volatility is fun. I was giving people calls on Twitter of like what I was gonna do here, and here, and it was awesome when it worked. It was validation for me that yes, it was a breakdown of the market microstructure. My thesis did fail on Tuesday when I was like, okay, I went long vol. I was slightly short an index. I lost money. A lot of people at that point would double down. And that's what you see a lot on FinTwit, where people are like, no, it's the market that's wrong. I'm going to keep shorting the S&P because I'm expecting a crash in the next 3 days, 5 days, 20 days, whatever.
Well, and you're more data-driven and flexible, which is all going to be very helpful for a long trading career. But it's exciting to kind of hear the inspiration and then, of course, data-driven mindset. Now, I have to, before we run out of time, I have to ask, in your travels, obviously, FinTwit has changed over the past few years since I joined it, and I've actively sought out looking for women in this space. And I am, excited also, are you going to stay in this space because you're in bioinformatics? I forget what it is exactly. What's your PhD in?
It's in bioinformatics.
Okay,
so it's like computational biology.
Okay, so that's more of a science technology. Are you going to still pursue that, or are you going to stay within the kind of finance trading realm?
That is a fantastic question, and I can answer that in a couple of weeks.
Really?
I have gotten interest by some hedge funds.
Yeah, there you go.
I don't know if I would potentially take a leave of absence to try working in finance, for instance. Ask me in a couple of weeks.
All right.
I'll answer it for you. So Claude Shannon, right? Everybody knows Claude Shannon, right? And he never, once he got the bug, that was it, right? He never gave up on it, the math, right? So like,
who are you referring to? Because I don't even know who that is.
Oh, Shannon, he's like one of the pioneers of a lot of data science, right? Like, I'll shoot you a book after this. It's a great story. He's a huge part of the history of comp sci, right? And so when you and he would go work on other stuff as related to information theory and comp sci, but like he was resolved to solve the roulette table. He had one in his house. He was so going to solve it that he had it in his garage, and like he's to the day that he died. So I think you got the bug, but whatever you end up doing, I think it's awesome. But
Thank you.
I think one of the things that I wanted to ask you was you built this whole support channel, right? Like you and Final October and your crew, and you guys help each other, like, and you help other traders. What was that? Where did that come from? Why'd you do that? Because like I know a lot of people, and not a lot of people are like good people. They're not gonna go create a room to help people, right? And you guys like actively try to help each other. And so tell me, like, how did that start? Right?
I mean, it's an interesting story. I mean, I was kind of already known in Unusual Whales for kind of being this predictor. I mean, mostly for nope reasons, just some people have vibe, and I guess I'm one of them. He had made some really cool calls on Reddit, like the GameStop one and some other ones, like predicting the VIX would go up in June of 2020, I think was it.
Mm-hmm.
I just like helping people, I like talking, I like explaining. One of the reasons that drove me to research and a PhD wasn't really the money aspect. It was more like, I have questions, I want to find answers, I want to tell people my answers until they're bored and are sick of me. So it's kind of always been like a natural thing for me to like try to assist people. I also just like elevating discourse, people in our, radius, the corporation, the Discord we run, like we talk about delta hedging, we talk about option Greeks. That doesn't happen in most trading rooms. People are learning, which makes me happier. People are avoiding blowing up their accounts, which also makes me happier. And I don't really have like a long-term vision for it. It's more just been like, okay, this happened, we're just gonna do it. So I do hope that with or without me, it continues. I'm really happy to see that more or less we have like a pretty positive space on the internet, which I think a lot of financial chat rooms are really not.
Mm-hmm.
Have you found that you've attracted more women to your FinTwit feed, or even in the chat room where you actively participate? I mean, where are you? Where you kind of are you seeing any trend there? Any stickiness with women who are actually coming in and looking for you?
I haven't seen like personally like more women coming in. I do make sure that in our place, like we do not tolerate sexism or, LGBT phobia of any sort or racism. So I would say that that's like I would love to improve it. I don't know how to really bring people in. Like I know, for instance, my channel.
Yeah, if it's your channel, then you control the culture. Same thing with my room, right? I run a live trading room every single day. And Anand said it's very different. In he's got a lot of cowboys. And he's admitted saying, I need to figure out how to fix this because they're already ingrained, quote unquote, option degenerates, right? They love this fuel of team sports and whatever. And so they kind of dismiss a lot of the women in the room or talk over them or what have you. And so once that culture's already ingrained, he needs now to figure out how to fix that versus you and I are doing our own thing. We can kind of make the rules.
Yeah,
I have like a mom edict. You don't say anything nice, you don't say anything at all.
Honestly, I mean, yeah, like it's been difficult because like a lot of people do come from like Wall Street bets or stuff where there's a completely different environment and expectations.
Yeah.
I think we tend to have more respect for women traders just because a lot of people in my chat room, and in the corporation have heard about me and like my research and like what I try to teach people. So it's kind of hard to be like sexist when it's like, dude, like one of our best traders is Lily. Uh, and she's also the mod here and also like wrote all these blog posts about options and is teaching people. I mean, it's a difficult, problem. I think a lot more men in general are attracted to trading just because of like, the risk element basically. And a lot of this more like impulsivity aspect of it. I think there's more women coming in basically, especially with the retail crowd with like Robinhood and stuff this year. I do know, for instance, like one of my best friends, Monica, who's going to be on my YouTube this weekend, like she got into trading around the same time I did. So she's actually way more risk friendly than I am. But I definitely would, love to encourage more women into the space.
And you are, I mean, just by talking, not just in, here on this, little get together, but on FinTwit, on your YouTube, it really will attract more women into the space. And it's not bad for you either, as it relates to testing your theories and connecting with people who can support and challenge you. But more importantly, I think it's cool because young women need to see what they can be. And so more power to you, and just
Okay.
really continued success with Nope. We did get some questions that are very technical. Maybe you want to answer those on offline, but like
I
data
mean,
questions, I can't even.
Hold on. Let me throw this in there. I think
Okay.
one of the things I think that can be done is that you and I've had this conversation, Lily, like not equalizing, right? Like it's an equalizing. Talent recognizes talent, and talent is talent. That's a meritocracy based environment versus like bullying or badgering, or I call it. I say there's two kinds of people in this world. You're either a creator or you're a manipulator. And if you're a creator, you're coming up with new things, new utility that helps enhance and produce the productivity of human beings, right? Or you're a manipulator, where you're manipulating around what's already been created, right? And there's some research behind this type of stuff, but effectively, me helping you, Samantha helping me, all of us kind of paying stuff forward, I think really will help. That if we can all commit to that kind of behavior, especially like males, right? Like it shouldn't be a male dominated thing, but it's really talent. Encouragement is a key to letting and helping talent come out of the ground, right? It was Samantha telling me, hey, you should post this thing in a thread, right? And I'm like, oh, I've never said anything before, right? Like, I don't know if anybody's even going to listen to me. She's like, oh no, you should do it. So I did it, and it turns into that. That's real talent, recognizing talent, helping that pour water on it grows. Do the same thing with you. You start, I told you it's going to explode. I told you this 15 times. I said, it's go find you. Don't worry about it. And if we take those glasses off of, you shouldn't be here, or you shouldn't be here, or you don't know anything, I think that fosters the growth that I think will expand this entire thing. Maybe it becomes female dominated environment. Who knows? But it's like you guys.
As long as we level it up, I'm good with that. But
to me, it's encouragement. The way you both have done this is super key, that we all can do to help people with talent rise up in all walks of life. And
remove some obstacles.
And I would share with everybody, everybody know a lot of my story. Like, I'm pretty humble background, and there were specific people that did like game-changing opportunity door opening, and there was nothing I could give them in return except to go be the best I could be. And they did those things because they were creators.
100%.
They didn't ask me for anything back, and except to be everything I could be. And I think if we do that with each other, and that's a focus that would be, that's my kind of closing statement about like all this. And I'm super excited to see what you've done. And like I said, super proud of what you've done for yourself, and that I can help you, right? I don't know, I take zero credit. I know you've told me, if I hadn't helped you, I'd take zero. It's not me. You're the talented individual. I gave you a little gas, right, to get in the car and go down the road. Like I think that's a big part.
to do the blog and the website. So it's 100%. All family.
It's 100%, and that encouragement
or community. Yep.
If creativity is in the fostering of the creativity, and you should flush that idea up. That's a good idea. See if it sticks. That mentality, I think, versus the hoarder, right? It's an abundance versus a hoarding, right? And creativity versus manipulation. If we can all do that, it'd be better.
I did want to quickly answer the questions because a lot of these are yes or no. So
go ahead.
Okay, so deltas changes for Jonathan. Deltas changes stop gas up or down. Intraday, we actually adjust the deltas every 5 minutes based on the option chain. So it includes all the second order derivatives. So gamma is reflected in the deltas, etc. So it does update over time, and that's why you can't just take the trade at the time it happens to actually calculate the real note. As do you need to ingest Oprah data? The better quality your data is, obviously the better. You can find me on Twitter. I can give you access to, it's also a GitHub repo, to what we've already processed, which is 5-minute option change in 2020 with Nope.
It's
More
opera.
than welcome. Yeah.
Yep.
So more than welcome to basically look at our data, play around with it, tell me what you find. Do you utilize dark pool data with Nope? Nope. Is Nope useful for investors with long time horizons or only day traders? I would say for now, I mean, we found the most obvious correlates day trader wise, because I mean, trading intraday is, what we do. Could it be useful long term? Not sure. We do find correlations with it 14 days, 30 days out. So if that counts long term for you. But I'm happy as long as I am able to by my employers to talk about it on Twitter and stuff. So excited to share more research.
Thank you. And I like the comments too. Real recognizes real. It's very apparent, apparently, in your Discord room. And Liam, thank you. He says, I've been doing this for a while, and I've always recognized the amazing natural talent of female traders. They seem predisposed to just playing this game the right way from the get-go. So much fun to watch. And I like this openness. I mean, it's a personality thing, but to me, this makes me a better person, better analyst, better trader to exchange and teach. I think women are also kind of natural teachers in some regards. But yeah, all the best. This is very helpful to, again, put this out there and see, where you go with it. But the fact that you're open and inclusive, right, is what we're kind of getting. This is very, very much elevating women in trading and finance. And thank you so much for coming on tonight. And Jonathan, thank you so much. The quant discussion too is where a lot of people want to come in and kind of pick your brain and see, how'd you get inspired? How'd you build this? Where are you going from here? And keep in touch, even if you go in-house someplace, okay?
Congratulations, Lily, on all your
Yes, congratulations. All right, thank you everyone for joining.
All right.
I appreciate it. And next Thursday, we'll have another a female trader who has been doing this for a while, and that's going to be Airplane Jane. Last week we had Chai Girl, Tracy Shoe Chart. And so it's not last week, but every other week we'll do something in this vein. And then Jonathan and I will be back on Tuesday for the Macro to Micro Power Hour, which is all things market structure and whatever craziness the market is dishing up. And I would like to see the Nope show this on Tuesday. Can we do that? Yeah, Jonathan, can you?
Yeah, we'll pull it up. We'll take a look at it.
Yeah, let's do it on Tuesday.
Yeah,
all right.
Let's do it. We'll loop her in. All right.
All right. Thank you.
All right. Bye, guys.
Have a great weekend. Bye.
Bye.